Valens Research, Uniform Financial Analytics.
McDonald's, they are one of the largest fast food companies in the world. In reality, I should explain what McDonald's does because McDonald's is not a burger flipping joint. McDonald's is actually a real estate play, and McDonald's is a franchising play and a distribution network play, right? In reality, most of their restaurants, they don't own the restaurants. They have franchisees who own the restaurants. They often own the land underneath the restaurants, but they're also valuable because of the value of those franchisees having to pay them and their logistics network for how they get their food and everything else where it needs to go. The really interesting thing about McDonald's is if you look at an as reported basis, you would see a company that you thought wasn't just a good franchisor. You'd say, oh, it's great. They're actually growing the business pretty steadily going forward. That's really powerful because I've got a company that has had returns that, other than 2020, have mostly been improving and are at a healthy 15%, and they're reinvesting in the business. That's great. What we see using uniform accounting metrics is McDonald's hasn't been growing at all. In fact, for the last 7 years, it's been shrinking its business almost every single year. There's only been 1 year in the last 7 years that McDonald's hasn't shrunk. So all this return on assets and profitability improvement they've seen has been because they're shrinking the business. We shouldn't bet on returns improving and this company growing. We should understand that if this company grows, returns are likely to come down. And if it doesn't grow, it needs to grow returns even more to be fairly valued. You don't understand, not even just, this is the mind-blowing thing. It's not even just that you don't understand how profitable a business is using as reported metrics. You can't even figure out which businesses are actually investing in themselves and which companies aren't if you use as reported metrics, because they create this gibberish noise on the balance sheet, let alone on the income statement, about what real performance is for business. And McDonald's is a great example of this. You think this is a growing business, a growing franchisor. What we see is a shrinking one, and that's the only way that it can boost its returns. And that totally changes how we think about looking at and analyzing business and what we can forecast in the future.
Valens Research, the world's leading source for uniform financial analytics.